that rate hike. Policy Committee of the South African Reserve Bank today raised its repo rate for its key interest rate by 25 basis points. Let's take a listen to the governor outlining the decision, Mr. Kanyago, the decision of the bank.
Since January, the Omicron wave of the COVID-19 virus has transmitted globally with diverse social and economic outcomes. Despite the high infection rate, many economies remained open, and with some exceptions, the economic costs of the virus continue to fall. Even as the economic impact of the pandemic fades, the outbreak of war in February between Russia and Ukraine is expected to reduce global economic growth and contribute to higher inflation. The war will likely impair production of a wide range of energy, food and other commodities, and further disrupt global trade. The SARB's forecast for global growth in 2022 is revised down to 3.7%, and for 2023 is lowered to 2.8% as a result of the war and the ongoing spread of the virus in Asia and elsewhere. For 2024, global growth is unchanged at 2.7%. Dramatically higher oil, commodity and food prices, additional constraints to trade and finance, and rising debt costs create more adverse economic conditions for most emerging and developing economies. Although policy settings in advanced economies remain broadly accommodative, the onset of policy normalization by major central banks and higher inflation has tightened global financial conditions. Investor appetite for riskier assets is lower. Economies that failed to take advantage of better global conditions or to reduce large macroeconomic imbalances remain vulnerable. Last year saw the ongoing recovery of the South African economy from the pandemic, expanding by 4.9% for 2021 as a whole, which is marginally higher than the 4.8% we had forecast in January. The South African economy is expected to grow by 2% in 2022, revised up from 1.7% at the time of the January meeting. This is due to a combination of factors, including stronger growth in 2021 and higher commodity export prices. Growth.
All right, so how does the Reserve Bank's interest rate hike play into President Ramaphosa's economy, faltering under inflation, high unemployment, and the ongoing fallout of the Russian war in Ukraine? Let's cross now to Johannesburg for a chat on the latest rate decision with Arise News correspondent Mxolisi Masango. Good evening, Mxolisi. Thanks so much for joining us. So was the Reserve Bank repo rate hike today in line with expectations?
Look, the Monetary Policy Committee has increased the repurchase rate by 25 basis points to 4.25%, which will be effective this Friday. So when we look at the MPC versus the language and tone that was used, it was kind of hawkish in a way. You know, the inflation outlook is higher, and this is after two members high up favored an increase of 50 basis points, which is not a surprise, as there was, a quarter chance that the rates would go up by 50 basis points after the Feds, came out with, hawkish tones in their speeches this week. So we're starting to see the first building blocks being put in place that will allow growth and investment producers that could, parachute growth in South Africa. Infrastructure is also a need and a very important component to bringing investors to the country. So clearly a long way to go after today's announcement. And this is all at that investment conference that kickstarted this afternoon in Sandton, where we heard our President Cyril Ramaphosa speaking duly about the need of investment investment here in the country and the need of the development of infrastructure in the country. So it was quite interesting to see the Reserve Bank Governor Mxolisi trying to strike a balancing act between trying to lure in those investors that were descended in Sandton today, as well as raising up of course, the repurchase rate by 4.25% today.
All right, thanks for that. So what were the key considerations for Governor Kanyago and his team for that 25 basis point hike?
Look, we are seeing a lot of uncertainty globally, and the inflation trajectory is wobbly in a way. So there were numerous points of highlight today, and the upside potential risk of inflation to a number of those factors, and were listed, and not just administered costs, but the Reserve Bank was looking at the potential second round impact of high food and oil prices. And one must also remember that these prices have been increasing relatively to core inflation since last year for an extended period, actually. So the GDP decision itself tells us that the South African Reserve Bank is banking on the impact of trade effect and export, commodity prices that have gone up sharply. So it's quite a catch-22 situation, as the Reserve Bank governor also pointed out today.
All right, and what's the outlook from the Reserve Bank on South Africa's, economic growth for 2022?
Lotus, the fact that growth holds up in its focus implies that the quarterly model projection continues, to show a long upward grind in interest rates. I think about 5% or close to 5.1 at the end of this year, according to the model, or 6.1 in next year. And it is not out of line given the outlook on the inflation trajectory in the country. So it's quite a tough balancing act for government at this particular point in time.
I can imagine it is. So is this rate hike the silver bullet needed to stabilize and grow the South African economy, create jobs, and so on?
Inflation will bridge the 6% level, so rate hikes might not be as aggressive as the other emerging markets, such as Brazil. Growth numbers are steady at this point. Inflation expectations have increased in the first quarter of this year, driven by the sharp increases in fuel prices. Higher food inflation will also follow, causing some sort of a domino effect, which would mean that retail will be holding back on employment. Subsequently, this means giving a signal to the markets or the retail sector to deal with some of the socio-economic problems that we're seeing in the country will move slow. So that is a grim picture, and that's no secret.
Indeed. Now, speaking of grim, how is the Russian war in Ukraine playing into the economic, and market considerations of the Reserve Bank?
Rhodas, the supply challenge and bottlenecks will continue. Supply side shocks are not just limited to the Russia-Ukraine conflict, but it is due to the ongoing coronavirus pandemic, particularly when the Delta variant hit us last year. There was a bottleneck effect there, and the South African Reserve Bank has been worried about easing those bottlenecks. So the next few weeks will be telling whether or not South Africa will be serious about its economic recovery plan, especially in the sidelines of the investment conference that is currently underway in Sandton.
All right, Mxolisi Masango, thank you so much for taking the time to take us through the South African Reserve Bank's decision to hike their benchmark interest rate to 25 basis points to 4.25%, talking about the implications. We appreciate your insight.